This is the briefing for Tuesday, October 7th. For at least several days, if not maybe a couple weeks, I've been talking about the divergence between price development and market structure. In other words, the market internals and price of the indices themselves. It's been very interesting, and certainly it is a situation that as I've explained in the past, that psychologically, from my perspective, I use a non-statistical amount of 70%, that the internals, if they're diverging from price, that price will correct to the internals. But there's always a 30% chance that the internals will correct for price. But that typically is around a news event. And today we certainly had quite the sell-off in the indices. And it's going to be interesting to see if there's any follow-through in tomorrow's trading and going into the end of the week. Now, I don't want to reiterate or review again all of the divergences that I've been talking about for the past week to 2 weeks. But even just recently, this is an hourly chart of the spiders, the Qs, and the IWM. And you can see even between yesterday and today, this was the high of yesterday. This is where market breadth was in the S&P 500. We had a higher high today, and this is where market breadth was. So you can see that divergence there. There was a divergence in volume. Net volume was diverging. It's not, you can't see it clearly on these charts, but even the same thing occurred in the NASDAQ. This is where breadth was at the high of yesterday. I'm sorry, it was right here. And then here was the high of today. So you can see it was pretty negative. Same thing with net volume. And the same thing occurred with the IWM. This was yesterday's high. This is where market breadth was. And this is today's high. And you can see where breadth opened up in today's trading. Net volume also. So it typically is a higher probability when you start to see a weakening structure within the indices themselves, that at some point in time, unless there's a news event, you're going to see you're going to see price correct to the internals, as we've seen in today's trading. Now, before I move on and talk about what else is happening, you can see that we came right down in the spiders and in the Qs to support. Same thing with the Russell and the IWM, and then we paused, and that is pretty typical. I've had these support levels up for the last couple days, and you can see the same thing. You can see the testing a support level and then pausing just above that support level. Now, this pause gives us an interesting situation for tomorrow's trading. We've seen in this market that a big move like this can get completely retraced in the next day of trading. A lot of times it happens to the upside, where we get a gap up and then all of a sudden the market just completely retraces the next day. But in this case, we have to open up or hold open the possibility that we could see another rotation back up, and then we get this greater degree time and price rotation. So trading above the 669.62 area in the spiders would suggest potentially that we're going to see this candle retraced. If that occurs, then we're probably going to retest the high. So I'm not saying that you can be long above there, but certainly that would suggest the potential for something that might be happening in completely retracing this. We've been in a volatile market, and that certainly would not be surprising. However, if we trade below this low at 667.5, that could be even more important. Now, this chart pattern is developing into a pattern I have seen before, but it's not complete there yet. What would occur would be potentially that we would take out the 667.5 area, but breadth would be stronger than what it is in today's trading. So you can see there were a negative 98 shares negative in the S&P 500 breadth. So that would mean trading below this 667.5 area on stronger breadth, in other words, maybe even positive breadth, before we see some type of rotation back up. How that rotation back up develops is going to be extremely important, potentially for the next greater degree time and price move. On the other hand, if we trade below 667.5 and breadth especially is weaker than it was in today's trading, then that's going to mean we're going to see an acceleration down. Potentially the next level of support in the spiders is 665, and then below that's going to be 662. So the key is this area of rotation in all three of the indices, and as to whether what happens with especially market breadth, if there is a plunge below support, or this is short-term resistance, would be 669.5. If there's a move above that, what's happening with market breadth particularly. Same thing with the Qs. Looking at this area of 605.68, trading above that. Honestly, if we traded above that, I'm not sure I would take a long position. I'd want to see what's happening to make sure that it's not a false breakout of this area right here. But I'd have to look at what's happening internally as well on the time frame chart that I trade. And the same thing with the Russell. Support in the Qs comes in at 603. Resistance, short-term resistance, looks like 244.66 in the IWM, and support coming in at 243. Now the daily chart's a little bit difficult to really see what's going on here, but you can see this last move here, and you can see what was happening with breadth here. Even here, breadth was declining. Net volume, up volume minus down volume, was declining over the last 4 days. In the Qs, we're looking at basically the same thing. You can see market breadth declining over this time period here. Net volume declining here, had a little bit of spike right there, and then of course declining in today's trading as well. And then the same thing occurring in the IWM. You can see even volume in the IWM falling off pretty nicely. Breadth falling off, net volume falling off. And then, of course, collapsing in today's trading as well. In terms of being overbought and oversold, the NYSE is still basically neutral, but we're approaching an oversold condition in the NASDAQ, so it's going to be very interesting. Now, this does not preclude the market from going lower in tomorrow's trading, but it does suggest that we may be getting at a short-term low. Now, one of the things, and I want to make this statement, is because a lot of times, sometimes I feel like I'm saying the market's either going to go up or it's going to go down tomorrow. And that's basically the case. But what I try and do is I try and strategize. If the market does this, I'm going to do that. If it does that, I'm going to do this. So I really have a strategy for approaching the market in each trading day, so that no matter what happens, I've got it either written down or in my mind that if the market were per chance to trade above this area right here, then I would have to determine whether it's strong enough to retrace this entire move. If it trades below here, I want to know, is it strong enough to the downside to see an acceleration downside, or is it, if we get a lower low and we see stronger breadth, does that mean we're going to retrace back through this support level and potentially see some type of rotation back to the upside, which would then suggest that how this develops is going to be extremely important, as I said previously in this briefing. So going forward, you can see also the S&P 500, what was happening with the percentage of stocks above the 50-day moving average, percentage of stocks above the 200-day moving average. In the NASDAQ, same thing. Percentage of stocks above the 50-day moving average, never even reaching this peak here at this price right through here, and then 200-day moving average declining. And of course, in the Russell, the percentage of stocks above the 50-day moving average, percentage of stocks above the 200-day moving average. So as I've shown these over the past week or two as well, but it's going to be very important tomorrow what happens here, and what happens not just in price, but what happens down here with all of this as well. Now, looking at where we are with total volume, and I pointed this out as well, this was pretty important the other day in the briefing, when I pointed out the fact that volume's increasing, net volume is decreasing. That suggests that, well, volume is increasing, net volume is decreasing, net volume is up volume minus down volume, that there's more selling volume than there is buying volume. And that was a key factor in my my analysis that we were approaching at least some type of a short to intermediate term top. We'll see whether it's just a short or intermediate term top potentially tomorrow and going into the end of the week. Same thing with the NASDAQ. This was NASDAQ total volume. This was net volume. Now we did have a spike on that day, which kind of put a crimp in my analysis. But this was pretty dramatic to see net volume falling like that and to see total volume increasing like it did. So the internals were screaming to us that potentially there was some type of at least a short-term top. Whether this is short-term, intermediate term, or longer term, it's yet to be seen. But at least we've got some parameters now to determine what the potential next intermediate term move could be in the indices. It's going to be an important day in tomorrow's trading. Have a great night.